I'm Roy Robertson. Today on Good Business San Diego, we're joined again by Brent Wilsey, president of Wilsey Asset Management, a San Diego-based firm providing investment guidance to individuals and businesses. If you've seen Brent here before or listened to his radio show or podcast, you've heard him touch on the concept of value investing. So today, we'll dig a little deeper on the topic and why Brent recommends it for many of his investors. So let's start with, you're an educator. Let's educate us about value investing 101. Sure. What exactly are we talking about?
Let me go back 40 years. The reason why I do this is because it's more conservative. And to give you an example, if you look at the past 50 years, growth investing, the worst three-year return, a negative 50%. We know once people lose 50%, they're going to panic and pull out. The worst three-year return for value investing is about 24%. You won't like it, but it's not so scary losing half your money. So that's why I chose value investing over growth investing.
And in value investing, you're talking about long-term fundamentals.
Yeah, and it's not really long-term, it's fundamentals. You look at what you're paying for the sales, for the earnings, for the cash flow. How much debt does a company have? Very important, you're looking, what is this company worth based on earnings today and going forward? You want to buy something on sale. You go to the store, you buy something on sale. Sure. That's what value investing is. You're buying a great business on sale and say, where will this be 2-3 years down the road? Okay,
that's the model you advocate. So let's compare that and contrast it with growth investing.
Growth investing, you don't care what you're paying for anything. You're looking at, this is a company that has some dynamic product that's going to do phenomenal down the road. You don't care what the earnings are now. You don't care about the debt. You're saying, this is a company that is going to set the world on fire, and I'm paying $10 a share today. It's going to be $30 a share 2 years from now because this great product, this great drug, or whatever it is that they have, it's going to grow to the moon. I don't like that.
Okay, so I know we're not going to get real specific about particular equities, but give us an idea of what is a value investment.
Yeah, I mean, think about food companies. Think about insurance companies. Think about banks. These are companies that are solid businesses. The banking system's not going to change dramatically over the next 3 or 5 years. Insurance is not going to change dramatically in the next 3 or 5 years. You invest in companies like this, you'll generally collect a nice dividend and maybe see the equity go up over time, maybe 10, maybe 15% on average per year over a 3 to 5 year period. That's kind of what you're looking for there.
Okay, so what can we expect in terms of a time horizon for value investing? And I cheated on this a little bit because I heard you talking about this in the podcast that I was listening to yesterday. But let's talk about that time horizon.
People love that podcast, by the way. But the time horizon,
I do.
Even though it is more conservative, we still say you should be investing for 3, 4, 5 years, because don't think you can do this for a year or two. You may have a down year, and we tell our clients, potential clients, out of a 7-year period, you're going to have a couple losing years. It's going to happen.
Okay, we're inside of a minute here, so tell us how it is that Wilsey Asset Management gets paid. Big question in a lot of people's minds when they bring business to you.
Very important, and we say we do better when our clients do better because we get paid off a fee basis of the value of the account. So that's why we don't want the accounts dropping 30, 40, 50%. We want them to go up in value. So when you do better, we do better. It's all fee basis. You're not locked in for any time frame. There's no commissions, no back-end charges. Again, you do better, we do better. We both want the money to grow in value, so we both earn money.
Yep. Very straightforward, very transparent. You have an opportunity to consult with Brent directly, face-to-face, which is a unique opportunity, right?
Yeah, they can come in, they talk to myself and Chase. We sit down, go over how we do everything for them.
Excellent. Okay, so you can schedule that consultation one-on-one with Brent and with his son Chase too. 858-546-4306. By the way, they both host this great podcast called Smart Investing. You can find them online too at smartinvesting2000.com, smartinvesting2000.com.